Hey,
And
Per, welcome back, and we are live. And just a second, I'll check whether I'm live on this on LinkedIn, and we are live on LinkedIn, YouTube, as well as on Twitter. Welcome back, and
cool.
I wanted to introduce. Yeah, so I will introduce to everyone. It's my pleasure to have Persephores again. He is called the Price Whisperer, and he is a thought leader and a well known pricing expert across the world. His work has been published in Forbes magazine, Inc. magazine, and various other things. He has been interviewed a lot in the past, and if you ever want to know more about Per, you can just Google the Price Whisperer or his name. You'll see tons of excellent work which he has produced in the last few, if last over a decade. Now, I wanted to, when we were going through a series of our conversations on LinkedIn and Twitter and YouTube, we thought there's always a feeling that with the CEOs and business owners is that they are afraid of salespeople getting not agreeing to the price increases or the right price, and they are always afraid, if I increase the price by 1%, the sales team says there will be resistance and they will not be able to carry that forward to the customer. So what do you think about that?
Well, I mean, you're right. People are very afraid of price changes and so forth, and it's why it is. It's. I think there's two reasons. One is that very few executives are truly understand the relationship between sales volume and revenue. They look at sales volume as a very we sell X number of widgets per month, and I want to continue to sell X number of widgets and or more. But at the end of the day, it's profits that drive a company.
Yeah,
I mean, we all know the saying that I'm losing money on every widget I'm selling, and I'm going to make it up in volume, right?
yeah,
And I just this morning I had a call with a CEO that implemented our pricing recommendations. Um, I don't know, a couple of months, no, a couple of weeks ago, maybe 3 or 4 weeks ago, and now he has enough data that he can see that yeah, they lost about 5% in sales volume. They lost, and those were from customers who were the smallest of his customers. He gained about 20% in revenue, right?
yeah, yeah, yeah,
And I mean, and so all of that is profit, and I like I'm another sort of similar story that I think. Um, that I think I may have mentioned before. I earlier this year I got a I got an unsolicited email from a client, and what it was a screenshot from his accounting system, and I could see that his sales volume was down a little bit,
yeah,
and his margin was up by, I think it was 49%.
yeah.
And his message was very, very clear, and he said, less work, more money, many thanks.
Yeah,
So
and moreover, I think what you just said, and he may have also told you that, or he may realize that the customer service, or when you move away the customers which are costing you a lot more, you reduce the customer service costs also.
yeah,
And like I have, you always say that I think I'm right in my I hope I'm right in my saying that the when you reduce the sales volume, the cost of goods also in totality reduces, and you get more profits. I mean, would you be able
Y-
to say that something like
Oh,
that?
absolutely. Yeah. The it's um, it again. It's that relationship that companies need to know. But I mean, the first off, for any product or service, there's always a price that generates the highest sales volume, right? And that is not necessary, or it's not the lowest price. And the reason that a low price actually can lead to a lower sales volume is because of something called expectation bias. And we all been there. We hold something in our hands, whether it's literally or figuratively, and so does all everybody's customers. And when we look at the price, we quickly make an assessment. Is this price, does it send a message to me about quality and benefit that is what I expect to get? And if the price is lower than what I expect, the low price will send a message of inferior quality and inferior benefit, and therefore you won't buy it. And again, like I said, we all been holding products like that in our hands, and said to ourselves, I kind of want to buy this, but price is so low that this must be a piece of crap,
Yeah,
right?
yeah,
And 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 then we don't buy it. And because of that, um the low price doesn't necessarily lead to higher sales volume. and
right.
and then of course the other thing that is always worth considering is that I said there is a price that leads to the highest sales volume. There's also a price that leads to the highest revenue, and that is always a higher price.
Hmm.
So if you know what price leads to the highest sales volume, if you know what price leads to the highest revenue, if you know what price leads to the highest profits, then setting a price that meets your corporate objectives is pretty darn easy.
Yeah,
And I mean, in some cases, and for some product or services, you want to forego higher profitability, and maximize your sales volume because you want to take advantage of the network effect, or you feel that it's important to fend off a competitor in some way. In other cases, you may want to focus on the price that would lead to the highest profitability, because the higher profitability, which is what we typically recommend our clients to do, will lead to more resource for product development, more or service definitions, more resource to marketing, more resource to sales development, even more resource to hire better people, right? Because they are more expensive.
yeah, I agree. And then, our topic is how to present prices to lower sales friction.
Mhm.
What do you think we should do, our salespeople and the entrepreneurs and the CEOs should do to reduce the friction?
Um, let me let me the one very common mistake that I see companies do is to present price without the relevant value proposition. You know, um, I mean, if you look at the price list, and there are companies out there, especially sort of older style manufacturing companies who send out price lists, and that's their tool to get business. And and um, and the price list has some kind of skew, and it has some description of the product, and no value proposition, right? And if you have no value proposition, the customer will inevitably uh, buy lower price goods than if there is value proposition, because then they have to look at the maybe a description of the product, and that can be purely technical, size and size and weight and RPMs or whatever it may be if it's a pump. and and not having a value proposition that tells the customer why this product is unique, leads to a lower willingness to pay, and therefore you can't have you can't you know it create downward pricing pressure. Another way that another very common mistake that I've seen, and I think I may have used this example in the past, is a big company, tech company, sort of famous tech company even. A few years back, they called me and they said, um, our investors are not willing to support our company anymore, and we try to increase prices. We're not profitable. We try to increase prices, and as soon as we do, our sales volume just tank. So I looked at their website, and the pricing page was one of these long pages where I scrolled forever, and all the text in the website said, "We are dirt cheap. We have the lowest prices in the industry." There were endorsements from customers saying that this company has really low prices and therefore they're really good, and all low prices, low prices, low prices. So when you finally scrolled enough, so you came to the whatever the prices were, um, the expectation that was set by the website meant that customers expected dirt cheap prices, and the
Hmm.
prices weren't dirt cheap, right?
Yeah. Yeah.
So so there was a mismatch here, and so I told the company, just simply remove that pricing page, or if nothing, remove all the text saying how cheap you are. And then
Yeah.
I followed up with the company a couple of months later, and the guy said that he said, we followed your advice, Per. We took away all that language and took away most of the pricing from the pricing page, and we've been able to double our prices and nobody complains, right? And now we're profitable,
Yeah.
you know.
So I have a question. Another example which I've heard from you in the past is the Apple Watch when it came and it had a gold watch and all that. Does that would you think that this will be a relevant?
Yeah, this goes to something else called price anchoring. Now, what I said, I mentioned two mistakes, right? The second one was to talk about how cheap you are and then present a relatively high price. Um, and the other the other very important way of doing this is to start to set a reference in whenever we are presented with multiple numbers. We as humans cannot not compare them. We always compare them, and as we read about these numbers, they set expectations, and the first number we want to read to support higher prices is a high number. And like in the case with the Apple Watch, when it came out, the Apple Watch was $349. I think they had a couple of models, but the one they wanted to sell in volume was $349. And and but at the same time, they came out with a watch that was $17,000. It was the exact same electronics, but in a all solid gold case. And what happened here was that all the all the media that wrote about the launch of this new Apple Watch wrote about the audacity of Apple to have be, to sell the same electronics for $349 and for $17,000. But the point was that every time somebody saw that $17,000, the 349 became more and more affordable, because suddenly you had a very high reference price, right?
Yeah.
And 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 if we look at this from how this is practically implemented, if you have if you have prices on the website, you probably want to have you probably have a good, better, best strategy, but it should be reversed. You should start with a best version because that is the most expensive price,
Yeah.
and then you have the good version, and then you have the whatever it becomes reversed in my head here, but a good, better, best should be reversed. So you should have best, better, good, right?
Yeah. Yeah.
Um, and that goes for menus. I mean, I've helped restaurants, right? And I said, put something up on the left top corner because we read top to bottom, left to right, right? And I say, put a family meal there of something got awfully expensive, right? And nobody's going to buy it, but it's going to set a reference for the rest of the menu items so they would appear more affordable.
Yeah. I agree. I agree.
So,
I would request if anybody has any question or anything, you can type in and I will read those questions to her. And this will be shared. This recording will be shared again on the on LinkedIn and Twitter and YouTube. But the live questions are always welcome.
mm,
So I wanted to
yes,
because I've worked with so many salespeople and organizations, and I see sometimes the challenge is that the friction that and the fear of these the salespeople is due to the lack of their training or their inability to not follow through the to understand to ask the right questions to the prospect and understand the actual problem they are facing and how this product or benefit or value proposition, like you said, is actually solving that problem. And if you don't solve that problem, what will be the implication of that problem? So if that, what will be the implication and how it is going to unsettle the goals of their own organization, it has to relate to that. And most of the time in B2B world, the the salespeople meet first are the middle managers, and the actual CFO and CEO who signs it is not even there in the picture. So they want to make sure that the right questions are asked. And I think you said that value proposition, and I agree with that, that the right value proposition and how it is to be shared has to be taught to the salespeople correctly. And would you agree?
yeah,
And would you like to add something more?
yeah. It's sometimes it's just mind-boggling how salespeople can completely miss the mark, and let me tell you a story here. I'm thinking of buying a new car. We're a one car family, and I thought to myself, well, maybe I should buy myself a car so I don't have to use my wife's car all the time. And but I want something small, something small and comfortable. That's what I want. So I went to a local car dealer here about a month ago, and I encountered this sales guy, and and I said to him, I'm looking for a small, comfortable car. And the answer was, um, how about this full size 4x4 truck? You know, I mean, what an absolute idiot, and so I just walked there from there, and then I actually sent a message to their management. You need to fire this guy. You know, he's killing your business,
Yeah.
which he does, right?
Hmm. Yeah.
If and I was very clear in what I said, what I wanted, and he directed me to essentially the car that he would make most commission on, right?
Yeah. I agree. I agree. So what can be the other four? Maybe is there any fourth or fifth point you would like to say here? Because I think we've
Well,
covered a lot.
if so, salespeople are they're ground down, grind down, because when they meet customers, and this is probably more B2B than B2C, but when they meet customers, when they try to sell something, they hear the same thing over and over again, and that is that your product or service is not as good as the competition and you're more expensive, right? This
Yeah.
is just negotiating tactics, or and when the kind of work we do in my company, where we go out and we measure what customers to a company are actually, or market I should say, to a company are actually willing to pay, and we do this anonymously. So these people that answer our polls cannot lie, because they don't know who would benefit. um, then then you can turn that information into sales training piece, saying that, well, this is what you guys think people are willing to pay for your product or service, but this is the fact of what the market are willing to pay. and
Mhm.
and there's always gaps, always. I
Yeah.
mean, and this is because there's a term here that most people are familiar with called buyer liar,
Yeah.
right? And that doesn't mean necessarily that every buyer lies, but it means that um, most most buyers withhold information that they think would be valuable for the seller to sell more to them or sell higher prices to them. Some outright lie, and very few tell the real true story.
Yeah.
And again, if we go back to that sort of car dealer example, you can imagine that you found this car that you wanted, right? And you sort of, would you say to the car dealer or the car salesman, but if you have it in white, I'll buy, I charge, you can charge me another 2 grand? No, you wouldn't, because you want the best deal.
I
What you
agree.
would say is that if you have it in white and you knock another $1,000 off the price, I'm going to buy it, right?
Yeah.
So, and that's what we all do. It's
I
just human nature.
Yeah, I agree. I would again ask everyone who is online to leave a question on the LinkedIn or anything. It will come up here on my screen on my software, and I will ask per the question. And I think so that people know about your organization a little more.
Mhm.
Would you be able to share the maybe the kind of companies? Like I saw a slide where you have a bunch of logos, and that's pretty impressive. So that everyone, like many people ask me, what kind of organizations do you support? Do you support the small, medium, or large, or technology, or B2B, or what do you support? So I think that's a good way to start answer that
Yeah,
question.
let me start by showing my computer, add file from my computer. No, slides, video, share screen. Here we go.
Yeah.
Share screen, share
It-
screen. Okay.
yeah, it will come to me.
Uh, oh, window. Here we are. Here we go. So these are some of our clients, and
Yeah.
just to give you some range. The Currently we're working with one company who is pre-revenue. One company is about just about $1 million revenue. One is about $3 million. One is $32 million. One is $440 million in revenue. And I just closed a deal this morning with a company that is about 7 billion.
Wow.
So it's really all over the map. And the process that I developed, to be honest, is works for really for every company, whether it's big or small, whether it's B2B, whether it's B2C. Um, the only thing that doesn't really work with our process is companies who sell exclusively to government organizations, because they take in proposals, and they have to buy the cheapest one, right?
Yeah. Yeah.
And it doesn't matter of how, I mean, and I obviously I know people who runs companies, successful companies who sell to government, and what they do is say, we go in with the cheapest price, and then we make our profit on change orders, right?
Yeah. And I'm pretty confident that based on what I've seen in the past, that you have this process, what you talked about, has not only in many cases doubled the shareholder value, it
Hmm.
has also increased the revenue by many times, and it has increased the profits from sometimes to 25, many times to 25 to 50%, or sometimes
Yeah,
even more, right?
yeah,
So I think it is not when we may have touched only the pricing part of it right now, but I would like everybody to know that pricing is not a number, and
correct.
pricing requires a lot of other steps, a lot of other strategies, which leads up to pricing, right? Would you like to
Yeah, that's absolutely true. And companies, and I mean, if we think about this from a from a private equity search fund point of view, it's all about shareholder value, right? And we are getting a good portion of our business from private equity groups, not from the actual private equity group themselves, but from the portfolio companies. And what I hear is that we have successfully managed to reduce the hold time from 3 to 5 years to a year and a half, which of course make a huge difference. And that is because with our advice, they meet that revenue target and profit target they had when they made the initial acquisition. And um, and the um, the it's all about um, thinking of pricing as a business strategy and not like a number. Just like you said, it's not a number. It's about understanding. It's understanding what customers to a company are truly willing to pay, understanding how you can position and market yourself in such a way that that willingness to pay increases, that the salespeople are trained to defend prices and and um, and certainly get the business without discounting or without discounting too much and so forth. And once you start putting pricing as a centerpiece of your entire business strategy, it transforms the company.
yeah,
It will create the resources, because obviously higher prices and higher profits, you got to do something with it, and obviously reinvest in the company to more more and better products, meeting customer needs better, more and better marketing, additional sales resources, even hiring better people, right? So that profits is that higher prices leads to is not self-serving. It leads to a company can very very quickly um, elevate itself to the next level, right?
yeah,
And if you think about this from there are lots of consultants out there that we're talking about business process re-engineering, very complicated, very expensive projects that and we're talking about adding 3, 4, 5% revenue as a result. We're talking about adding 50% revenue, you know,
yeah,
and it can be
yeah.
done overnight.
Yes, yes, definitely,
Yeah.
definitely. And thank you very much, Per. And I would request everyone to reach out to either me or Per. And if you want to find Per, you can just Google the Price Whisperer, or you can reach out to me on LinkedIn, and he's also on LinkedIn.
Of course.
And my email is sandeep at smbcapitalpartners.com. And reach out to me, and I'll put you in touch with Per, and then we can help you. Thank you very
Well,
much, Per.
Well, thank you very much, Sandeep, and I hope the audience found this of interest. Thank
Thank
you
you.
so much.
Bye.